Oh, hello guys. So, good morning from here. I hope you guys are doing well and fine, and I hope you're having a great trading week. So today is Friday, and it's the end of the week, and yeah, I'm not in currency pairs because it's been on the range for a while. So I am stuck with synthetic, and I think I'm beginning to love synthetic indices. So because it's traded on weekends, so that's by the way. And you can see I had a trade right here running on crash 300 right there, and you can see my entry right here on the QML level, and you can see the analysis where I had labeled everything, and they have liquidity assessments down here. It draws the liquidity and then fake out zones, area of liquidity rate price we have to hunt, and then trigger my entry. So we are not going to go to the chat and we can explain this, but we go to the before chat, and I shared this with my mentorship group members, and we discussed about this pair, and this was the analysis I did that I asked them. Will you enter at the breaker block that is in line with the QML, or you would like to enter at the refined entry at this area of supply? Most of them said they would like to enter at the supply zone, but I myself was like, alright, this is my setup. I have QML and I have the breaker right there. So I'm willing to trade off the QML level. Possibly I can reach 2%, one on the supply, one here. But then I discovered that based on the higher time frame, this whole thing is the other block, and I should not refine too much to enter this area of supply. So there was the analysis before, and yeah. So this was it again. Sorry, that was crash 300, not 500. So we have it right here. I already placed my sell limit right there, and you have you saw my stop loss up there. So we'll now go to the live chat and we'll talk about it. So this is it right here, and you can see that I am still on the trade right here. I have my sell entry right here, and I have my take profit right there. So I'm going to explain the chat and show you guys how I did the analysis. It's just gonna brief. I'm just gonna brief it. All right. So I'm going to delete every drawing that I did here. So sorry about that. So I'm going to my object list and I am deleting. What am I doing? Object list, please. Object list. Then delete all. So now I'm going to explain this analysis and setup right here. So you can see it's just a chat, and you might find it difficult to analyze the trade. And if you are not observant enough, you won't see what I did see, what I did so, whatever English. So you know how what I always do? Go up to your higher time frame. You know your bias. You zoom out, and you get to see that this is a bearish structure, right? A bearish market structure. Now, what is the next thing I have to do, since I can't find the clear stuff on the daily, the monthly, but I do know it's a British market? I saw something interesting on the weekly time frame. I was like, all right, I should go to find something interesting on this weekly time frame. So right here, we get to see a hunt on previous high, right here, an old protected high. The price hunted that range high, right? So if you do know about this concept I talk about, trading at a range highs and lows, knowing your algorithm, know where price the algorithm wants to hunt. So that's what I'm labeling right here. All right, so we have this right here. So these are my range highs and lows. So I have right here buy stop resting on that high. So we have buy stops resting on that high. So after buy stop, right here we have sell side liquidity pool area resistance that has a bunch of liquidity resting on that. So we have sell side liquidity pool. So we have liquidity resting below that. Pool of liquidity resting below that has an area where we have support. And we can see that when price gave us this liquidity pool, it traded higher to hunt buy stops. So since it held buy stop, we are now left with a new buy steps, right? So it traded lower on the range highs and lows. After taking range high, it needs to go and take range low. So we have to see now get to see around lower, and we now have a new range low right here, right? So this is previous week low hunted, and we have a new range low, and then the price rallied higher to take out the buy stops, right? then rally lower again to hunt this low, taking out sell stop, right? So we now have there are some cases when you're trading on a range highs and lows, you will get to see a protected high in that range, and you have to see a confirmation to say that that buy stop will be protected and price trading in the range highs and low IPDA. The high will be protected and we rally to take our liquidity. All right, so right here, what you get to notice, price traded lower, and it did grab liquidity from right here. So we have um, right here equals, so it was haunted. So if you check where I have my entry, you get to see right there at that level. So now sorry that I was doing this analysis on the weekly time frame, but you get to see clearly if I do what run out to the daily time frame, which is what the area where I would like to see my analysis. So right here, right here. Now what do you get to find? These are the areas that I marked for you guys on the weekly time frame, and you can see how clean it is on the daily time frame, trading range highs and lows. So you can see the labeling right here. Now I have my sell liquidity pool, area of liquidity pool, which is area resistance and support. So we have to see the algorithm take that. Right here we have a hunt on this high. You can see how the wick traded higher and hunted the buy stops. So it traded lower, gave us a new low right here, giving us a sell stop liquidity pool. Then it rallied higher, and we now have another hunt on that high, giving us a buy stops. Now it traded lower to take liquidity from this low, and now we are seeing it trading higher. But we get to find something interesting, and that was a rejection to show that this high was protected, and we run down to the 12-hour time frame, right? So now what did I see on that area? I saw an order block. All right, so other block gave me the confirmation that it is a rejection, but not yet confirmed, because yes, I need to see all the confluence and confirmation entry. Now after seeing that, what was the next thing I noticed? I noticed that I have a demand zone that was violated right here, another block. And you can see a structure was formed here after this compressed liquidity was formed. There's no structure right here. This was where the structure was formed. So we have this high, low, and high, which is the stop hunt at this high. So most people looking at this right here will say you're having a breaker, right? But at the same time, when a breaker fails to deliver price, we get to find QML. All right. So this is the area where I'm selling from, right here. So I had QML level right there. So I have my sell stop right here, and if you check my level, that was where I had my entry right there at the QML, which is in line and it comes like with my other block. So that is something I talked in the last video, that there are other things you need to trade with the other block, not just the last buy candle before a positive move or last year candle before a positive move. So we have our entry right there, we have the other block right there, and now I have to do my liquidity assessment. So this is my liquidity assessment, and right here I have a support to resistance flip right here. So we have SR flip. So SR flip, that is used to identify support resistance flip, and still yet I mark that area also has a faker zone right here, so I can take out the support resistance flip, but that's by the way still the same. So I have faker zone right here, so I take this one back to where it belongs right here. The delete this one right here. All right, so I have my support resistance flip, similar to saying that I'm having a faker zone, right? So we have a faker zone right here, and I had an extra confluence of a faker zone right here. So that is, by the way, we have this right here, right? And I don't know why this stuff is doing like this. So we have this right here, right? All right, so we have this right here, and then we have this right here. So it's like saying we have an imbalance, fair value gap, that the market we have to balance and then mitigate the other block. All right, so refine it down. You can see this is the whole other block right here, and you can see it was engulfed by the next candle. So running down to 8 hour right there, it's as clean as it is on 8 hour right there at the other block. So yeah, and right here we have another figure zone right here. So that is to say that a stop hunt should occur to take out liquidity and activate the other block. And an extra confluence, I need to also see a draw to liquidity while doing my liquidity assessment. So this is my draw to liquidity, which is the trend line. Price should violate, should trade lower and take all this liquidity resting on this low, taking out every sell stops and hit my TP targets right there. So there is it right here. So that was the analysis done, and still running down to the lower time frame. You want to find, you have the 6 hour time frame, and then the 4 hour looks interesting. This whole buy candle that traded higher to take a buy stop from previous high is an order block and is in confluence with this interesting candle that I posted previously. All right, so we have that interesting candle in confluence to that area, and we see how price went straight to the area after a stop hunt on liquidity and triggered me in, and I'm not going to swing this trade perfectly smooth, right? So still on this one, and it's running safely, and I think I'm still on crash, I'm sorry, on VIX10 trade right here. So I was trying to have another entry right here, but price didn't come back, so I think I'll take this off. So you can see I am still on VIX10 trade, still swinging it perfectly and nicely. I'm waiting for it to get TP, and my TP is my daily time frame, higher time frame right here. And why did I place it? Oh, still far from it. All right, so I could take TP right here, but I long-term trade, I could possibly like to take it right here. So that's like $200, right? Let's check, $276. So imagine how long I'll have to hold this trade down to that level right there. So thank you guys for watching this. I would like you to share your thoughts, like, comment, like, subscribe and share to others to get in touch. All right, so yeah, thank you guys for watching, and that is just it. So see you guys later on. Till then, be safe and take care of yourself. Okay, so safe trading. Bye.